If you've been struggling to stay consistent with your trading, some days green, most days red, this video will change how you approach the market. Because consistency doesn't come from luck or from catching a few big trades. It comes from having a clear, repeatable system. And today, I'm going to give you exactly that. A simple step-by-step plan to grow your account using SwiftAlgo. By the end of this video, you'll know how to set up the indicator, what markets to trade, when to trade, how much to risk, and how to stay consistent long-term. Let's get into it. Step 1 is setting up SwiftAlgo correctly. First, open TradingView.com. Choose any market you want. In a minute, we are going to look at the best markets to trade for consistent profits. Now, search for SwiftAlgo in your Indicators tab and add it to your chart. Once it's added, you'll instantly see buy and sell signals, stop-loss levels, take profits, a trend dashboard at the bottom, and a win rate dashboard at the top. The first thing you want to do is head to the settings and go through the 6 backtest sets and find one with the highest win rate. Then pick your risk to reward ratio. We recommend sticking to 1 or 2 for the best results. But if you are curious how SwiftAlgo performed in the past, check out this video right here. Now the indicator is set up, so let's continue with choosing the right market and time frame. If you're new, stick to 1 or 2 markets only. Don't try to trade everything. That's how traders burn out. The best pairs for consistency with SwiftAlgo are gold, XAU/USD, volatile, clean structure, great for intraday trading, euro to US dollar or British pound to US dollar, smooth and predictable price action, NAS100, higher volatility, perfect for more experienced users. For your time frame, go with the 15-minute chart. It's fast enough for daily trades, but slow enough to filter noise. Avoid the 1-minute and 5-minute charts unless you're scalping. They'll make you overtrade. The next step is choosing the right time to trade. Timing matters more than most traders realize. The best sessions to trade are when volume and volatility are highest. That's the London session from 7 to 16 UTC and New York session from 13 to 22 UTC. If you're trading gold or Forex pairs, these are your golden hours. Avoid the low volume periods like mid-Asian session. Price moves choppy, and signals tend to be less reliable. During your trading window, your goal is simple. Look for 1 or 2 clean setups that fit your plan. Nothing more. Now let's move to the exciting part, the strategy. Here's the formula that works consistently. Signal plus EMA plus dashboard confirmation. Before you enter any trade, make sure you have selected the backtest set with the highest win rate. Now when you get a buy signal on gold, look at this EMA line. It needs to be green and going upwards, then check the dashboard. You want to see the trend bullish, high strength, and no ranging. If everything lines up, enter the trade and set your stop loss and take profits how the indicator shows you, and wait for the market to do its thing. For sell signals, it's the same logic. Sell signal, red EMA line going downwards, and bearish dashboard. Simple, clear, repeatable. This combination, signal, EMA, and dashboard confirmation, keeps you out of 80% of bad trades. Now, the most important part, risk management. Even the best system fails without discipline. Here's the rule. Risk only 1 to 2% of your account per trade. If you have a $1,000 account, that's $10 to $20 per trade. I know it looks too small, but we are focusing on consistent growth, not on gamble and hope. Never increase risk just because the setup looks good. That's emotion talking, and emotion destroys consistency. Your daily goal? 2 trades max. And if the trading conditions don't align perfectly, you don't enter. You stay out of the market. That's how you protect yourself from losing your hard-earned cash. And the last step is tracking and improving. There are tons of trading journals on the internet, but you can keep it simple. Once you take a trade, winning or losing doesn't matter. You take a screenshot and you write a few notes of what you did right and wrong. For example, a winning trade can look like this, and a losing one can look like this. Trading consistently isn't about chasing perfect setups. It's about following a perfect process. The same system, the same rules every day. If you stick to this plan, trade only during high-volume sessions. Take 1 to 2 high-quality setups per day. Risk 1 to 2% per trade. Use SwiftAlgo for data-backed confirmation. You'll build a system that doesn't rely on luck, because consistency doesn't come from predicting the market, it comes from understanding it. If you want to start trading with structure and confidence, get access to SwiftAlgo today. The link is in the description. And if you want to keep learning how to grow as a trader, check out the other videos on this channel. We post tutorials, strategy breakdowns, and data-proven guides to help you trade smarter every week. Make sure to subscribe and hit the bell, because your next step toward consistency starts right here.